Are you ready to unlock the secrets of building wealth, harness the power of financial markets, and embark on an exciting journey towards a brighter financial future? Welcome to Investing 101, a beginner's guide to building wealth. Congratulations! You've taken the first step towards transforming your financial destiny. In this comprehensive guide, we will demystify the world of investing, equip you with the necessary knowledge and strategies, and empower you to make informed decisions that can change your life. Get ready to unleash the potential of your hard-earned money, as we explore the exciting realm of investing, where every dollar has the potential to grow and multiply. Imagine a world where your money works for you, where your financial goals become a reality. It's time to break free from the shackles of financial uncertainty and embrace the exhilarating journey of investing. Just like a tiny seed can grow into a mighty tree, your investments have the power to grow and flourish over time, providing you with opportunities for a more secure and prosperous future. But investing is not a magic formula. It requires knowledge, patience, and a well-thought-out plan. So, let's dive into the fundamentals and set you on the path to financial success. Before we embark on this exciting journey, let's take a moment to clarify your financial goals. What do you want to achieve? Is it a comfortable retirement, a dream home, or financial independence? Define your destination, and investing will become your vehicle to reach it. Setting clear and achievable financial goals is the foundation of successful investing. It provides you with a roadmap and keeps you focused on the prize. Your goals will shape your investment strategy and guide your decision-making process. Now, let's explore an essential concept that underpins the investing landscape: the relationship between risk and return. Investing involves taking risks, but it also offers the potential for attractive returns. Understanding the risk and return trade-off will help you make informed decisions and strike the right balance that aligns with your goals and risk tolerance. Every investment carries a certain degree of risk. Higher-risk investments, such as stocks, may offer greater potential for returns, but they also come with increased volatility. On the other hand, lower-risk investments, like bonds, may provide more stability but offer relatively lower returns. It's important to find the right mix based on your goals and risk appetite. Now that you understand risk, let's explore a crucial strategy for managing it: diversification. Diversification is like planting different seeds in your investment garden. By spreading your investments across various asset classes and industries, you can reduce the impact of any single investment's performance on your overall portfolio. Diversification helps minimize the risk associated with individual investments. By allocating your funds across different asset classes, such as stocks, bonds, and real estate, you can potentially mitigate losses and maximize your chances of long-term success. Now that you have a solid foundation, let's explore the various investment options available to you. Stocks, bonds, mutual funds, and real estate are just a few examples of the vast investment universe. Each comes with its own characteristics, benefits, and considerations. Stocks represent ownership in companies and offer the potential for capital appreciation. Bonds are debt instruments that provide regular interest payments. Mutual funds pool money from multiple investors and provide diversification. Real estate can offer income through rental properties or potential appreciation in property values. To start investing, you'll need the right investment account to suit your needs. Individual brokerage accounts, retirement accounts like IRAs and 401(k)s, and tax-advantaged accounts all serve different purposes. It's essential to choose the right account based on your goals, time horizon, and tax considerations. Retirement accounts offer tax advantages, while brokerage accounts provide flexibility and accessibility. It's important to understand the rules and limitations of each account type to make the most of your investments. Now that you're equipped with the foundational knowledge, let's explore some investment strategies that can help you achieve your financial goals. Value investing involves seeking undervalued assets. Growth investing focuses on companies with high growth potential, and dollar-cost averaging encourages regular investing regardless of market conditions. Each strategy has its merits and aligns with different investment philosophies. Value investing aims to find bargains in the market, while growth investing seeks out companies poised for rapid expansion. Dollar-cost averaging helps mitigate the impact of market fluctuations and takes advantage of market volatility. It's important to choose a strategy that resonates with your investment goals and risk tolerance. Investing requires thorough research and due diligence to make informed decisions. Let's explore the resources and tools available to beginners for successful investing. There's a wealth of information available at your fingertips. Financial news outlets, online investment platforms, and research tools can assist you in analyzing companies, understanding market trends, and staying informed. Researching companies, analyzing financial statements, and staying updated on market trends are essential for making sound investment decisions. Take advantage of the resources available to you and develop your skills in assessing investment opportunities. Successful investing also involves managing risks effectively. Let's explore some key principles of risk management. Assessing your risk tolerance, implementing asset allocation strategies, and regularly reviewing your portfolio are crucial steps in managing risk and maintaining a balanced investment approach. Understanding your risk tolerance and diversifying your investments across different asset classes are essential for managing risk. Additionally, periodically reviewing your portfolio allows you to make necessary adjustments based on your changing financial circumstances and market conditions. A comprehensive financial plan and clear goal setting are vital components of successful investing. Let's explore how to create a roadmap for your financial journey. Developing a financial plan involves setting specific, measurable, achievable, relevant, and time-bound, SMART, goals. It also entails establishing emergency funds to handle unexpected expenses and contingencies. Financial planning helps you align your investments with your overall financial objectives. By setting both short-term and long-term goals, you can prioritize your investments and make informed decisions that support your aspirations. Investing for retirement is a significant aspect of long-term financial planning. Let's explore strategies to secure a comfortable retirement. Retirement accounts, such as IRAs and 401(k)s, offer tax advantages and should be maximized to their full potential. Regular contributions and taking advantage of employer matches can significantly accelerate your retirement savings. Investing for retirement requires a long-term perspective and consistent contributions. By starting early and taking advantage of tax-advantaged retirement accounts, you can ensure a secure and comfortable retirement lifestyle. The digital age has revolutionized investing, introducing new possibilities and opportunities. Let's explore how technology has transformed the investment landscape. Online investment platforms and robo-advisors provide accessible and cost-effective options for investors of all levels. Cryptocurrencies and blockchain technology have opened up entirely new avenues for investment, but they come with their own set of considerations. Technology has democratized investing, making it more accessible and affordable than ever before. Online platforms and robo-advisors offer convenience and personalized investment strategies, while cryptocurrencies have gained traction as a new asset class. It's important to understand the risks and benefits associated with these advancements. To become a successful investor, it's crucial to avoid common pitfalls that can derail your financial journey. Let's explore some mistakes to watch out for. Emotional decision-making, chasing hot tips and market trends, and taking excessive risks are some of the common mistakes that can lead to poor investment outcomes. Emotional decision-making can cloud your judgment and lead to impulsive investment choices. Chasing market trends can often result in buying at inflated prices. Taking excessive risks without proper analysis can put your capital at stake. Being aware of these mistakes is the first step towards avoiding them. Building a sustainable investment strategy requires discipline, patience, and a long-term perspective. Let's explore the principles that can guide you on this path. Discipline and consistency are crucial in adhering to your investment plan. Regularly reviewing your portfolio and making adjustments based on your changing needs and market conditions is essential. Seeking professional advice when needed can provide valuable insights and guidance. Building a sustainable investment strategy involves maintaining discipline and staying focused on your long-term goals. Regularly reviewing your portfolio, rebalancing when necessary, and seeking professional advice can help you navigate the ups and downs of the market. Congratulations! You've completed our journey through the world of investing for beginners. Armed with knowledge, strategies, and the right mindset, you're now ready to take control of your financial future. Remember, investing is a lifelong journey, and it's never too late to start. Start small, stay consistent, and embrace the power of compounding to build wealth over time. Thank you for joining us on Investing 101, a beginner's guide to building wealth. Don't forget to like, subscribe, and follow for more valuable content that empowers you to take charge of your financial